first thing we're going to do, as we do with every DMS, is the state of digital, where we're giving our thoughts, in particular. This is the Digital Marketing Summit, so this is less about media and advertising and more about marketing technology and how we sort of see things panning out. So after a brief preamble, we're going to talk about markets, MarTech, commerce media, and mobile. By way of preamble, can't help but notice that change is accelerating. We talked about this. It just seems like it's coming faster and faster. And the reason why that's important to folks in a fast-moving ecosystem who intermediate deals is because it very much change drives strategy and, in particular, growth decisions. So corporations always have a choice, right? Build or buy. But in an environment where change is accelerating, you tend to default towards a buy. That probably explains the significant activity since the pandemic started of completing deals. By the way, another change that is highly welcome is that it's not just, it's the gender of the suite of the people doing the buying. That's right. 30% of these deals had a woman as in the C-suite of either the buyer or the seller. And I am of the firm view that 30% is a good start. Let's keep it going. All right. So, we're like I said, a lot of change. We're kind of in this sort of mixed time period where we've got some negatives impacting the ecosystem and the deal marketplace. There are macro uncertainties, and usually uncertainty is the enemy of deal making. If you have an environment where you're not sure what the future is, that tends to pause deals. And we're like George Costanza. We got it all, baby. We got inflation, recession, war, supply chain, pandemic, you name it. We got every macro uncertainty possible. So that's sort of like our baseline. We'll see how the year progresses on that front. And then we had this massive tech sector sell-off, probably overdue, right? Because as Mark will talk about, the valuations in 2021 got to some pretty heady and indefensible levels. And generally speaking, what happens is when you get this kind of a rapid sell-off, you get a dispersion in perspective. So buyers tend to reorient their thinking on valuation immediately. They just look at public stock prices, mostly their own, and see that drop, 50, 60, 70, 80, 90%, and go, oh, well, their valuation is down. Sellers, on the other hand, take some time. They have to go through the 5 stages of, denial, bargaining, anger, depression, and then finally acceptance. And that generally takes 2 to 3 quarters. At least that's the pattern recognition. And here we are. We have noticed since Labor Day, couple quarters after the tech sell-off hit its inflection, people starting to talk deals again. So hopefully that will come back. And let's not forget, we've got these massive tailwinds. We've got sectoral tailwinds. Remember, digital advertising growing at over 20% a year for the last 20 years. Name me another industry with that kind of consistent growth rate. I'll wait. Actually, I won't. There is no other one. Lots of disruption, high growth in some subsectors like commerce media, mobile apps, and CTV, and that change is accelerating. And then we've got some structural tailwinds as well. Private equity is the largest buyer in this sector. That is an about face from where we were 5, even 3 years ago, and understand that private equities are in the business of fundraising. So not only do they have to deploy that capital, they also have to return that capital. So by definition, unlike strategic M&A, where it's one and done on a deal, private equity means at a minimum it's 2. Right? So getting in and getting out. So that creates a flywheel effect. And then, as Mark will highlight, there are now 50, I count, repeat, 50 public companies in ad tech and MarTech, and the good news is they're all trading at a discount. So we'll see when next year when the 52-week high starts coming down, whether we'll see some activity amongst the public companies. So And by the way, it turns out everyone's getting into marketing. Every company with large consumer data touchpoints is launching some sort of marketing or advertising or media capability. Companies diverse across the spectrum, and we expect that trend will continue. The other thing to note is that there's big turmoil in big tech. So amongst these tech leaders, sorry, we're missing one. There we go. TikTok came in vertically. There's some interesting things going on with this cohort, and notably three sort of themes, if you will, of what seems to be going on. Number one, major business model changes. Think about Amazon getting into advertising, Microsoft revamping their initiatives in advertising, and massive foray into gaming. Meta is trying to do a complete pivot. Twitter, of course, is fucked, but Lord knows what they're doing. So lots of changes going on in terms of the business model. Second is, it seems like these companies were operating historically in a monopsony, which is, monopolies in different silos. They seem to be running into one another of late, right? Whether it's media, cloud, or data, the Venn diagrams seem to be overlapping, and believe me, that will make for some interesting spectator sports. To watch what unfolds. Just witness Apple and Facebook. And then third, of course, is increasing government scrutiny. We've seen privacy and some of those initiatives, and that'll continue. But I think the one to watch is antitrust. Historically toothless policies, but my presumption is going forward that they're going to get a lot more teeth. Speaking of, so I'm not going to go through. I'm going to skip this slide. I posted this. I call it a realistic Web3 glossary. All you really have to do is look at the bottom line. The total return of all marketing investments in the metaverse will be zero. And then, of course, and by the way, if you're going to burn $4 billion a quarter, come on, Meta. I got a few ideas for you that would give you a better return. Nonsense. And of course, you can't look away from the Elon Musk Twitter drama. I made a fun little video about that, which we'll be showing at the end of the day, so stick around for some fun. All right, and now I'd like to invite up my partner, Mark Greenbaum, to talk about the markets.
Great, thanks, Terry, appreciate that. So we'll get inside the public markets here, looking at the numbers. Terry foreshadowed this a little bit, but let's look at last year and what a year it's been. Yes, the great tech sell-off is evident in the numbers. Every subsector down, and down big, kind of consistent with the narrative you hear out there, doom and gloom and kind of end of the world type stuff. NASDAQ was off 28%. Almost all the big guys were down in the 30s. And look at the two subsectors where LUMA focuses primarily, ad tech, martech, down at the bottom of that list, off 56, 60%. So not a good year in the public markets for these stocks, but let's put a little bit of historical context around that, right? So if we look back to where we were kind of pre-pandemic, beginning of 2020, pretty much every subsector saw a significant rise in multiples, kind of following the acceleration we saw in conversion to digital. That proved to be, like these multiples, a little less sustainable. So if you look at where we are compared to then, pretty much everything is up with the exception of martech. I mean, perhaps not the best multi-year return, but a little bit disconnected from the doom and gloom narrative you kind of hear out there in financial press. And if we kind of look at the public company ecosystem, drilling down into ad tech and martech, as Terry kind of referenced, we've doubled the number of public companies in the last couple of years. Where pretty much any company, even remotely close to being ready, managed to get out into the IPO market last couple of years. We are currently experiencing an IPO drought we really haven't seen in about 20 years, but there remains a pretty robust pipeline of companies ready to come out as soon as that market reopens. If we kind of look at the ad tech and martech universe, these are the indices that LUMA tracks, LUMA A for ad tech, LUMA M for martech. You're seeing, almost 50 companies representing $200 billion of market cap, $36 billion of revenue, and importantly, growing at almost 20% annually. So pretty healthy ecosystem even after the massive tech sell-off. And you want to put a little bit of valuation metric context to the stock prices. Again, you see how that 200 billion spreads across the ecosystem. Kind of where were we pre-pandemic? We saw multiples for ad tech in the 6s, MarTech about 9, actually a little bit high compared to historical averages. Those numbers, as we kind of peeked through, pretty much doubled to, some would say irrational highs of double-digit revenue multiples for both sectors. Last couple quarters have been volatile. We kind of have finally, as Terry was referencing, coming into some stability. We settled in at what we're going to kind of call the new normal. This is actually pretty consistent with where multiples have been historically, in the 4s for ad tech, approaching 6. And now since that kind of mid-year reset, we've kind of seen some stability. Now, actually last week was pretty good for ad tech. They saw a little bit of a spike, another good day out there today. But we're seeing some seasoning at these multiples where I think buyers and sellers are starting to see the world similarly, which we think will continue to be good for deal making. So transitioning to M&A, deals are still happening. Strategic deals continued. Now, yes, we saw a deceleration last quarter, off about 14% from where it was. But compared to last year, we're pretty much on pace in terms of number of deals. In fact, if you count them up year to date, we may actually eclipse the number of deals we saw compared to last year's historically high numbers, albeit at lower aggregate valuations. But the deals are still happening. What has slowed meaningfully is the financing environment. Venture capital in particular, this is looking at the large deals, those scaled transactions, the over $100 million raises, have pretty much fallen, cut in half for ad tech and MarTech, which is consistent with what we've seen across the broader VC ecosystem. You see it's like a stair step coming down more than 50% kind of over the last year. We were in the 170, now all the way down to 75 billion. Now, that's actually in line with what we've seen as a historical average. So this talk of the VC market being completely dead is actually, it's way off where it was, but it's returned to some historical average, more seasoning and normalization. What hasn't slowed, as Terry referenced, is the private equity activity. Private equity continues to be among the most active buyers in the sector. Here's a snapshot of deals just in the last year. Not a huge surprise when you think about the amount of dry powder that remains to be deployed. These are trillions of dollars looking for activity, not surprisingly concentrated among the largest funds. But this is capital looking to get to work. I know anecdotally we have seen private equity discussion activity at an all-time high, kind of looking at just about everything that's out there. So we expect them to continue to play a meaningful role in deal making in this year to come. So that's the overview of the markets. Let me hand things off here to my partner, Brian Anderson.
Thank you, Mark. So first of all, packed house. This is awesome to see. When we were talking about, back in the spring, well, do we kick off our events again? Digital Media Summit, Digital Marketing Summit. Are people ready to get together again? So obviously everybody is. So it's great to see everybody here. So what I'm going to do for this section is really talk about, we were here 3 years ago. So let's talk about the differences between 2019 and today. So we've all read about all the privacy platform changes and the impacts on data and identity solutions. Obviously, the big change was the pandemic. So a lot of press around the inflection of e-commerce, streaming TV. The areas that haven't got as much press, but I think are super interesting, is really the emergence of influencer marketing to a mainstream marketing channel, and then the shift of B2B MarTech and sales tech to digital. I'm going to cover all these except for streaming TV. Terry did a long presentation in our May event, so if you're interested in that, you should just go on our website and check that out. So we've all witnessed, the changes, privacy laws, GDPR, CCPA, the other state laws. Probably more importantly, the data restrictions coming from the platforms. So, cookies being deprecated, no longer being supported, and then the mobile world. The movement of the identifiers to an opt-in paradigm, which roughly about 15% of people are opting in. So the net effect is a lot fewer identifiers. So that's dramatically impacted, obviously, one-to-one targeting on the open web and in the mobile ecosystem. And then we've all seen Facebook's woes, 800 billion-ish of market cap disappearing. So yes, there's the metaverse thing, but there's really the loss of signals and customer acquisition costs going through the roof for their customers. And then measurement has gotten, challenged with the lack of identifiers with, things like multi-touch attribution just fundamentally breaking. So with that, there's actually a lot of opportunities that have emerged. So the first, most important dynamic has been enterprises focusing on first-party data, capturing, managing, and executing on that first-party data. So you've seen a lot of different capabilities really grow in the last few years with that. So CDPs, data clean rooms. You've seen a proliferation of new identifiers and identity solutions, and then also the embedding of first-party data into identity graphs. On the advertising side, we've seen explosion of commerce media that Connor's going to go into next, a reemergence of contextual advertising, and then an area that we've always thought has been underinvested or under-focused or had less focus was the creative. That's an area we see a lot more interest, some companies really emerging and growing in that space. And then finally, the industry moved to cohort-based targeting rather than one-to-one targeting with things like Google Sandbox. The biggest challenge out of these new things is really, if you're focusing on first-party data, that's obviously a much smaller data set. So what is the addressability for customer acquisition in this new paradigm? So in the CDP space, since the companies are either embedded within large enterprise companies or private, you can't exactly measurement the growth on a revenue basis. But what we've seen is significant growth of employee base and funding. We've seen a half a dozen companies reach unicorn or near unicorn status just in this sector. Another thing that's been really interesting to watch is areas associated with the CDP. So first and foremost is the data warehouse space. So Snowflake, you've probably been paying attention to them, but that is an amazing business. It has the best net revenue retention of any business out there, it seems. So has just had rapid adoption among enterprises. The other area that hasn't been getting as much press is the emergence of these companies that call themselves reverse ETL companies. So if you're an enterprise and you implement a data warehouse, the argument from these companies is you don't need a CDP. You just use us to extract that data and we'll push them into the execution systems. And with those changes, we've seen kind of two words emerge in the CDP space: composable and unbundle, which merely means instead of licensing a monolithic stack from a CDP, just take the pieces that you need. So it's an interesting debate. We do have a data and identity panel, and so this will be one of those areas of debate there. So if you look at, we created this diagram, I don't know, half a dozen years ago when CDPs really emerged to really talk about the different capabilities. If you redraw it, into what some of these parties would say, well, all you need is a data warehouse and a reverse ETL. I know folks like Jeff at Telium and others will argue against this. Again, look forward to the discussion in the data and identity panel. So data clean rooms. So this is an area, once an enterprise has their first-party data captured and they want to utilize that, so we see an emergence, a greater emergence of second-party data sharing. So that's what data clean rooms enable, is sharing your data without data leakage. So you've seen a number of companies emerge here. Obviously, Google announced Ads Data Hub, 6 years ago to merge their data with their customers' data. But it's a lot more interesting with companies like Habu, InfoSum, LiveRamp, Audible, Decentric, et cetera, that are enabling the sharing of data among parties. We are very bullish on this category. So are marketers. This is a survey that Merkle did at the end of last year that shows a majority of marketers plan to increase investment in this category. The biggest issue that we keep hearing about is, what about the interoperability? So first of all, this diagram is illustrative. I don't know which clean room is working which brand, so don't take that too seriously. The point is really, okay, if P&G and CVS both are licensing the same clean room, great. I bet you can work together very easily. But what happens when there are those situations where they each have adopted different clean rooms? I think that's still really the unresolved question that the industry is figuring out. An interesting announcement that came about 3 weeks ago was from Google. So they announced PAIR, which is Publisher Advertiser Identity Reconciliation. They call it a data clean room protocol, It's specifically for their DSP, DV360, to help brands match first-party data, their first-party data with publisher data. And what's also interesting is they're relying on InfoSum, LiveRamp, and Habu for the matching. So this is not interoperability, across everything, but it's one use case, DV360, to be able to utilize, the data that's captured in the clean room. So I think what you'll see is things like this coming out so you can have more and more utilization of clean rooms. So influencer marketing, if you ask me in 2019, what's your view on influencer marketing? I'm like, it's interesting, but when we talk to marketers, they all say it's experimental. It's not a mainstream marketing practice for us. Well, what's changed? First of all, TikTok obviously exploded, and then in the pandemic, influencers really became real as far as people paying attention to them. And one thing, this is an example, I'm a huge college football fan, so the whole NIL, the name, image, likeness dynamic, super interesting. The amount of money that some of these kids are now getting playing college sports is dramatic. What is this? This is influencer marketing. So just an example. Very boring slide here, but the dynamic we saw in the B2B world is obviously the move to remote work and no more in-person sales calls. And so you saw a dramatic shift to digital B2B sales and marketing. And what's interesting about these solutions, and this has been going on for some time, but really inflected during the pandemic, is where CRM systems has really been a sales management tool. These systems are really focused on making the salesperson more effective, closing more deals, the marketing person more effective, bringing in more leads. And while I think fintech had the most unicorns birthed in the pandemic period, there were half a dozen sales tech companies that reached unicorn status here, so showing the dramatic adoption and growth of this category. Lastly, we all saw the inflection of e-commerce from our perspective, since we focus on technology companies, is really the growth and emergence of really interesting companies that are focused on helping the retailers sell for e-commerce. So we know this is the Digital Marketing Summit, not the Digital Media Summit, but we wanted to also focus on commerce, retail, media, because this is an amazing, dramatic, growth area that we think that everybody needs to make sure they focus on, both on the media side and the marketing side. Connor?
Thank you, Brian. So we're going to talk about commerce media, and I think, really a lot of this applies to this room. Maybe not in the media activation, but the core of how you actually get here. And Terry talked about some hype cycles before. There's a lot of hype around retail media and commerce media. I think this is one we think really has legs, has a long staying power, unlike some others like Web3. So the first reason is just the scale, right? So retail media is expected to be about $40 billion in total spend this year, going to $60 billion by 2024. Some have it at $100 billion in 25. These numbers are from March, but I have yet to see anyone actually correct these expectations for macro headwinds. Clearly, the major player here is Amazon, right? So over the last 5 or 6 years, Amazon has built a massive media ecosystem. They went from almost no media spend to now about $37 billion this year. So the large majority of retail media, and they've done so with a massive amount of scaled consumers that they're monetizing on their site, off-site, on their entertainment properties, et cetera. And as Terry alluded to, this is drawing a lot of people into this sector. So you kind of have everyone is now an ad network, and that's the digital commerce players, the mass merchandise guys, even category specific. It's expanding to sort of intermediaries. So you've got travel companies, delivery companies, consumer companies that were very anti-advertising for at one point are shifting into this, and even some of the infrastructure around financial companies and payment platforms. And it begs the question, why are all these players trying to move in? Let's see if I can click forward. There we go. Is it A, to improve the customer experience? B, leverages their existing assets around data and personalization? Is it simply that it's just way higher margins, right? 40% gross margins versus maybe they're 2 or 3% on selling goods. I think it's pretty clear here that it's all of the above across all these different aspects. The other side of this is, why do marketers care, right? Why is the ecosystem spending dollars there? Pretty clear, if people can attract dollars, they want to get into that business. We really see it as the fact that commerce media is at the center of these fundamental changes. So as Brian alluded to, there's a lot of challenges in data and identity right now. There's a lot of challenges in performance too, right? With Apple IDFA and other things going away, there's a ton of signal loss. And so marketers are desperate for performance and being able to use data identity and being able to get to growth. And commerce media is able to deliver this sort of across the board. We like to sort of look at it in this comparison to search and social. So in digital media, search and social have been the giants, right? This is what's attracted the vast majority of spend. And we see commerce media as really lining up very well against these. So the reason search and social have done so well is they had three core things. They had scaled consumers, they had a ton of first-party data on those consumers, and they had automated performance. And by that I mean they had a very simple on-ramp for marketers to come and spend dollars and get results out and actually shift ad spend to cost of goods sold. So what that meant is they attracted millions of advertisers, and they're all able to spend to the efficient frontier, which is particularly important in times like right now as there's concerns around recession. You find marketers want to shift more and more to proving the value of their ad spend. Commerce media has all of these things, right? Especially for the biggest player. They've got scale, first-party data, and automated performance. And importantly, especially in a world where there's signal loss, they have closed-loop attribution. And so they're actually able to see the transaction and tie it out. And you really saw this come to bear this last quarter. So in Q3, you had Meta, Google, Snap all report much lower growth or actually declining ad spend in their businesses. Meanwhile, Amazon had over 25% growth in their media business. So it's very clear how much power there is to the actual data signal that they're able to capture. So I get a lot of questions on commerce media. Are we at peak commerce media? There's really room for more platforms here? And I think it's important to remember what commerce media or retail media really is. I mean, for the most part, it's search advertising on site. So you have consumers coming to your site, and therefore you can monetize them if they're going to spend time. And so really, that's the basis of what started Amazon's, right? Before we ever got to talking about Amazon's media business, we talked about the fact that Amazon had shoppers coming to their site to start their search, to start their journey. And so, as I said, all you need is if you have a brand where people are coming to buy and spend and search on your site, there's an opportunity to monetize that. Just like any website, right? If you have consumers coming to your site, you can monetize them with media dollars. Here, it just happens to be, very bottom of the funnel. In order to do that, though, and I think what relates to this room especially, is that it really requires core MarTech capabilities. So it requires very strong user experience, robust data capabilities for those platforms to understand their consumers, and personalization such that you can tie ad spend either to them directly in their search or move more up funnel into display and video. And we're starting to see this really take hold. So just this week, Standard Media Index put out this report that's showing paid search is actually shifting from more of the overall search platforms towards retail media specific places, because that's where consumers are starting to spend more and more time doing their searching. They might start at Google, shift to a platform, but then on those platforms, they are spending time searching and looking for more products. And so with all that, to Brian's point, why are we talking about this at this conference? Well, it's because the MarTech portion of this is really a core function and really the foundation of commerce media. So when we put out our LUMAscape earlier this year, we made sure to highlight that CDPs, data clean rooms, analytics and attribution, these are all, and actually the personalization, which is the bottom right there, are core to making this all work. And then you've got really stages of retail media, right? So it starts at search. We are seeing it move up into on-site display and video. The next leg is really off-site audiences. And this is where you'll see, this is where you'll start to peak out, right? There are platforms that are going to stop at each of these places along the way. Not everyone's going to be able to expand and completely revamp their business around commerce media. But if they have valuable data, they are able to move up that funnel. But what that means is it's a lot more touch points and it's a lot more complexity. And so for that reason, we think in this space, one of the biggest things is that there's going to be hedge gardens, right? So if Google, Facebook, Amazon, they're all walled gardens, right? They've created a lot of the technology, they own it in-house, they control the data. Well, for most other platforms, even some of the biggest players like Walmart are leaning into leveraging partners. And as LUMA, where we're looking to do deals, an ecosystem that's built around needing a wide ecosystem of partners and lots of platforms is where there gets to be a lot of excitement. And so that's one of the things that we are very excited about here is how much people are going to have to use and leverage different technology platforms that really span across the ecosystem in order to execute on this. Thank you, and I'm going to give it over to Dick here to talk about mobile.
So there's been a lot of talk about slowdown in the mobile app economy. And if you look at the data, this is Data AI, which used to be App Annie, kind of the authority on mobile app industry data. Their CEO is discussion leader for the mobile panel later today, so we can get into more detail around this. But sure, year over year, Q3 was down about 5% in terms of consumer ad spend, consumer spend in apps. Still massive market and $30+ billion. And if you look at what that is relative to pre-pandemic levels, it's up over 40%. So still healthy growth there, I think navigating some macro headwinds. And then if you look at the other metrics that we can track, downloads and time spent, it's still a really large, attractive market to operate in, just facing some temporal headwinds right now, but still a very good place to be. And then we're seeing a lot of impact from the earnings reports from a few macro trends, belt tightening from marketers, reducing ad spend in the face of macro uncertainty. There's some dynamic of lapping a tough COVID comp, and then still some continued difficulty in terms of matching the best users with the right apps, given some of the privacy changes that we've seen from Apple, particularly on the platform side. Speaking of which, the one headline you'll see here that's different than the others is Apple announced, very strong results in the quarter. But if you listen to the detail on their earnings call, they commented on softness from both digital advertising as well as gaming, so consistent with the rest of the ecosystem. And let's talk more about Apple, given they're getting so much attention, given their advertising activity. I think everyone's familiar with the great marketing campaigns they've been running on the privacy standpoint, probably seen this ad for a girl's browsing history being auctioned off until she opts not to share or not to let brands track her, and magically that all goes away and makes people feel warm and fuzzy that they're not being tracked. But it's not that Apple isn't tracking you. They are. They just have a different definition of what tracking is, in that they don't share your information with third parties, but they certainly use it for targeting or what they call audience refinement or personalized advertising. And that's a good thing, right? Like, if we have to see ads, we want them to be relevant and a good experience. And that should apply to the whole ecosystem, not just be resident to Apple. And I think regulators are kind of taking note of that right now and looking at it. So we'll see how that evolves over time in terms of preferencing their own tracking versus others. And then turning to the ad experience, Apple's obviously hiring a lot on the ad side, and they talk about how they focus on delivering the best experiences to people all the time, not necessarily consistent with the ads business in practice. Historically, they've run Apple search ads, which I think a lot of growth marketers talk about as not being the most performant, difficult to scale, and oftentimes results in you paying for your own organics. And then I think people would be surprised as they've expanded beyond search ads into other O&O display advertising at some of the campaigns that just recently have gotten a lot of coverage in the press in terms of gambling ads, adult video chat. Certainly a lot of room for improvement on the ad experience side, and tools that help with effective and appropriate targeting are important for the ecosystem. And I think we should keep in mind that driving app installs is different than influencing elections, and I think policy has overcorrected here a bit. And how are marketers responding? AppsFlyer research shows that app install budgets are down 14% in the first half of the year. People are turning more to owned media, which is driving results. And owned media has its own challenges from a platform privacy standpoint. Google's now making push notifications opt-in, which makes sense. But Apple in iOS 15 introduced some new things in terms of pixel tracking on email, which is making it difficult to manage campaigns, as well as on push notifications, not necessarily something specific to push, but their focus mode, which enables you to mute signals when you're, I mean, they have a whole range of activities here, whether it's at work, at home, reading, gaming, whatever, so you can turn off things, and that's had an impact on push open rates. We have two CEOs from this industry that are on the mobile panel today, Brett from Airship and George from OneSignal, who can talk about how to effectively navigate these changes. And there are new opportunities coming out with the platform changes. This is live activities, which Apple introduced, which allows you to open a channel on your home screen to engage with a brand, and they'll refresh content as it's available. Their best practices on the developer page that talks about this say, we recommend that you don't use this for advertising or promotions, but they've opened that up in push notifications, as you can see here with an Uber ad pushing Peloton. This is obviously, it's an opportunity, but there's a lot of responsibility involved in terms of how you engage with users. If Uber keeps pushing me ads for Peloton, I'm going to mute that ability on their front soon. And then kind of an eye chart here, but another potentially positive development is Apple's new release for SK Ad Network, their measurement software. Hopefully this is going to be a tailwind for the industry as it rolls out. It's going to take a while to roll out because it has to be adopted by advertisers, publishers, apps, everyone, and the consumer. But it should get you more signal to measure your campaigns, hopefully help unlock more ad spend, and drive growth in the ecosystem. As you can see, it's very complex. I've probably listened to a dozen webinars on this. All of the expert practitioners are still coming to terms with what it actually means. And I think that's going to be probably helpful for the networks and the measurement players who will help solve this complexity for smaller publishers that don't have the resource, or smaller advertisers that don't have the resources to do it. Turning to M&A, if this works. We might need a new battery. Can someone advance the slide? There we go. This is just a snapshot. I mean, we've talked about private equity buyers, obviously have been active in the space. And this is just a snapshot of kind of a number of the well-capitalized industry leaders and their activity over time. It's slowed in the current market environment. There's 10 deals that will be green in a second. There we go. 10 deals this year from these players. And a bunch of them have been tuck-ins from Branch, Moloko, and Particle getting into M&A activity. CleverTap took out a competitor in Lean Plum. Airship added acquisition capabilities to their retention and monetization ones. But in terms of deals over $100 million, there's been two from this group. AppLovin expanding into CTV with their acquisition of Whirl. And then the biggest one, Unity paying what was, at the end of the day, about $3 billion for IronSource. I think that'll look good on their P&L as they've experienced a lot of struggles on the Operate business, now called Grow, their advertising business. And it will materially change their profitability profile, where they were aspiring to be break-even, and IronSource has been profitable for a long time. But it'll be curious to see how the strategic rationale plays out, having a plug-in integration with the Unity editor is a huge potential distribution advantage for them, and we'll see if they can capture more share in the mediation space where AppLovin is currently the leader. And I think all of these guys, or many of these folks, would be interested in more M&A, looking for more scale, diversification, and the strategic benefits that come with it. But the current market environment is making a lot of that tough, given the mixed max of buyer and seller expectations. And then there's a whole new category. We ended on this slide at DMS in May, of big boys that have gaps in mobile. And mobile app is so different than the rest of advertising. So I think a number of these people are potential acquirers in the space. We've talked about depressed valuations in the current environment, so we'll see if that helps them get off the dime. So that's all I've got.